I want you to know that I'm not a financial advisor, and I definitely am not responsible for whatever you do with this information. The strategy is called the 4-hour range. One candle gives you your whole game plan for the day. Here's how it works. Every morning you mark the high and low of the first 4-hour candle that forms on that day, based on the New York time, of course. That high and low becomes your range. Those two lines are your entire roadmap for this session. No moving averages, no RSI, no vibes, just range. The beauty with this strategy is you can add these things later on. Then you drop down to the 5-minute chart and you wait, because you're waiting for price to break out of that range, close outside of it, and then close back inside. When that happens, that's your signal. Simple, right? Let me show you what that actually looks like in real trades. This is a replay of some live trades I took earlier this week. Now here's the part where most people messed up. They see the break and they jump in immediately. Don't do that. We don't care about the break on its own. What we need to see is the candle actually close outside the range. The wicks don't count, and then we need price to come back inside. That's the setup. And right here you can see the candle closes back above the range low. That's our signal to go long. Entry right here on that close. Stop loss goes at the lowest point of the breakout move, because if price goes back down there, the setup is dead and we're out. No arguments. Take profit is always set at 2R, meaning twice whatever our stop loss is, and then we just let it cook. So as we can see, price started to climb and it hit the target. Done. Clean trade. That trade right there was $915 in the green. That's a nice trade. Alright, so this is the second trade I took for the day. Same range, still active. Price has been moving around inside after the first trade, and now it's starting to push up toward the range high. Let's see what happens. It breaks right above the range high. Candle closes outside. Okay, we're watching, and then the next candle closes back inside the range. That's it. That's our short signal. We flip it. Instead of going up, we're looking now for price to come down. Entry on that close back inside. Stop loss goes at the high of that breakout, because again, if price goes back up there, we're out, we're wrong, we are done. We want our trade to stop, and the take profit always remains at 2R. Price dips a little, bounces slightly, and I'll be honest, for a second it looked like it might go against us. That's normal, that's trading. But then it rolls over and heads straight down to the target. That one closed. It was a $794 trade. 2 trades, both green. So I'm done for the day. I know what some of you are thinking. That looks too simple, and yeah, it kind of is, but simple is not the same as easy. The hard part is trusting the rules when price is moving and your brain is telling you to do something else. Most traders lose money not because their strategy is bad, but because they don't actually follow it. This system is only one range, 3 simple steps to our target. It only works if you actually stick to it. Every time you go off the script, you're basically trading a different strategy. I just want to say welcome to Trade Lab Live, my new channel where I post only live trades, live replays of the trades I've taken in the current week, where I'm only going to post live replays of the trades that I took. Full strategy breakdown can be found on my main channel, Trade Lab. A link will be down below.